In this video, we want to talk about Monster Beverage, and according to one analyst on Wall Street, they believe that the share prices remain under pressure. Now, from a technical standpoint, you can see we recently had some support as the decline came about and stopped at $48 before rising. You can see in the past that this $48 level also served as resistance. Typically, resistance turns into support. However, one thing to note is that the most recent visit to this level did not end in price definitively closing above what was all-time highs at the time. And so this level of support may or may not hold, meaning the buyers were not in control because they couldn't definitively take out the sellers. The sellers are still in control. Scrolling down to the daily chart, and the sellers will continue to be in control until prices breach and close above this short-term trend line. Now, before we get into some more technicals, let's actually get into what this analyst on Wall Street said. So Monster Beverage's virtual shareholder meeting saw the company offer an update on energy drink category trends in the U.S. They also talked about recent innovations and commentary on pricing, promos, and leadership. Now, the analyst that I'm referring to is Citi. They believe the company's shares will remain under pressure following the event, while Morgan Stanley lowered its estimates for the stock, citing further weakness in the U.S. scanner data. Now, Citi said the company acknowledged the recent slowdown in the energy drink category, but commented that they believe the softness is temporary and they are optimistic about the second half of the year, including a 5% U.S. price increase in Q4. They go on to say overall, they see near-term risks to numbers and stock sentiment as long as the U.S. data remains soft, but they remain and they have a buy rating as they see strong growth in international markets and believe that the slowdown in the U.S. is reflected in the stock price. Here's what Morgan Stanley had to say. They said there was not a lot of new news from the event, the virtual shareholder meeting. However, the bank lowered its price target for the stock to $60 from $65 and maintains an overweight rating. So $60 is up near what was all-time highs. So, you're looking at a 15 to 20% spike in price to get to that Morgan Stanley price target. One thing to note, this is your 13 and 26 simple daily moving average. These are your momentum indicators, and they are pointing down. And you also have the infamous death cross. That's where the 50-day in red crosses over and below the 200-day, which is in yellow. Now you have your short-term, intermediate, and longer-term trend lines, rather moving averages starting to turn down. So that's not good for price. Now, as I mentioned, this big macro resistance support band is holding for the moment, partly because prices are oversold based on the RSI. I want to look below this band and see if there's any levels of interest. And the only level of interest that I see is this big monthly buys level at $35. You had the rally base, rally price came back, dipped its toes in the water, and then took off. So potentially if we see monthly candles, weekly candles closing below this, again, resistance support band at $48, prices could come and continue to move down. $42 will be my next target. Resistance, support, support. As this extended range candle signifies on the smaller time frames that there are no real buyers. So let's wait and see what happens over the rest of this month and in July to see if this $48 level can hold. One thing to note on the daily chart, this was a beautiful level to get short if one saw it. You had support, drop, base drop, forms a daily sellers level in the process of dropping. That would have been a breakout to the downside trade, but that's hindsight. Let's see if this $40 level holds. Thanks for watching. Subscribe. Please like the video.